Welcome to Common Sense Investing. My name is Cameron, and today I have the privilege of interviewing the CEO of Gatekeeper Systems, Mr. Doug Dyment. For those new to Gatekeeper Systems, they are a company that provides video security solutions for public transportation. Right now, primarily school bus safety, protecting people in transit, mostly children. However, that's not all. There are other opportunities, other markets such as the bus, the rail that we'll talk about in this interview, first responders, taxis, transports, anything that moves. Gatekeeper has a video security solution for it. Here's a whole bunch of their products, which sets them apart from the competition. You can go to their website and take a look. As well as thanks to technology and their investments in R&D, it's not just about cameras anymore. They have a host of other services and products, other streams of revenue, including smart city integration, automated lane enforcement, and other offerings, including mobile data collectors, which we'll also talk about in the interview, that should provide recurring revenue in the future. So go take a look at their website, go do your research. This is not financial advice in any way, shape, or form. This is just me talking about Gatekeeper Systems as an average retail investor, and here to convince you whether you should become an investor of Gatekeeper Systems and can this company just continue its stunning growth. Let's get to this interview. So I'd like to welcome to my channel today the CEO of Gatekeeper Systems, Mr. Doug Dyment. Thanks for joining me here today, Doug.
Good to be with you, Cameron.
So we've got some questions here for you that I've gathered up from your shareholders. But to start, I kind of want to talk about your earnings. Q2 earnings for 2024 came in record earnings again with 9.8 million in revenue, but probably more impressive is you pulled nearly 1.6 million of comprehensive income out of that 9.8 million. In the first 6 months of 2024, revenue is up 35%, but again, comprehensive income is even more impressive, up over 100% from 1.7 million to 3.6 million in 2024. Those are some great numbers. But, these interviews, that's never what people want to discuss, right? Investors are generally looking for problems, red flags, reasons to be afraid, things like receivables and expenses. So, really, I'd like to open up the floor to you to talk about the past quarter, an open-ended question of what went well and what needs to improve.
I can tell you, Cameron, that, we were, first of all, the quarter was a success, right? In our view, and I could see it coming. So we reinvested, we purposely reinvested some of our cash back into, particularly this year, back into the business. You have to do that. That increased expenses. I can't imagine any company not reinvesting their cash back into their business for future growth, and that's what we did. And I think you and I have done enough of these interviews to know that you know me well enough as a CEO, where I'm very conscious on our cash management, and we're always trying to look at our investments back into the business have to be able to turn profit relatively quickly and sales relatively quickly. And some of those investments are a little bit longer term, of course, right? But we want to be careful with those types of investments because um, that can potentially lead to dilution if you don't manage that properly. And that is not something, as you well know, it's not something that we want to see happen. One of the questions that came up, I noticed a few times was, the receivables were up. That's pretty normal. It's just the timing of that cash turning, and in relatively short order into Q3, Gatekeeper as of today, we're sitting on about 8.5 million in cash, and we have no debt. So we got access to 8 million in our lines. So that gives us access to 16.5 million. We got 17 million in working capital. I mean, those things are just they're quite positive. So now we're looking at, okay, where are we gonna reinvest that cash? Because having cash on your balance sheet it's not doing anybody any good. We gotta turn that cash, and then we gotta reinvest it and start to leverage up. So we had some increase in expenses in our R&D, of course. We budgeted for a significant amount more this year than we had last year, but we're on track with our budgeting. And then on top of that, we had to hire more salespeople, more customer support people. And we've done a reasonably good job of managing the large number of customers that we have. with the small amount of staff that we have. So as we bring on more and more customers, there'll be some increases in our operating expenses, but our plan is to grow that revenue, um, at a larger amount than obviously the expenses. But in this last quarter, compared to say last year, that wasn't necessarily the case. But there was some significant investment made into the business. One of the things that the investors won't necessarily be aware of is the increasing cost in cybersecurity. So we launched our new data center, and there's a cost there. We've now ported all of our revenue producing customers to the data center, and along with that, like I say, there's a when you're dealing in a market like K-12, where you got children and you got video and you got kids' faces, and and those sorts of things, and especially in the public sector, like transit, cybersecurity becomes pretty darn important if you're going to be a data company. So we're investing in cybersecurity, and there's been a cost to that. But even though our costs have increased, a little bit, we were still able to, as you well said, we were still able to throw a lot to the bottom line. And I think our operating margin was still hanging in there around 17%. So that is, to me, I don't know. I don't know if there's too many microcaps under 100 million in value that you can find that have that kind of performance while still investing back into their business.
It's very impressive, Doug. Yeah.
Yeah. So sometimes investors just kind of have to be reminded of that, right? So yeah, so the Q2 was, it was quite positive. Maybe a little bit of a negative, which investors won't be aware of this. I don't mind saying is that we were a little bit offside on our K to 12 projections. We had planned for a little more revenue in K to 12. It doesn't necessarily mean that we've lost those projects. It's just there's some things that are outside of our control and the timing of landing and those sorts of things. So we're looking to bring those in the coming quarters. And that's pretty common in our business, where some projects can get pushed out. Just talking a little bit about the sales funnel. And I think this is where I know you've got some questions here about projections and those sorts of things, and that I don't give any guidance. But one of the things that's happening in our sales funnel, Cameron, is that we're experiencing a different type of growth than we ever have as it relates to some projects. And that's really a reflection of how our platform as a service business model works. A lot of your investors have heard me on my soapbox many times talking about the platform as a service business model and how it's increasing, revenue per vehicle. But some of the new investors may not be familiar with it. But that business model is driving more revenue per vehicle, more revenue per train, and it's starting to drive that top line and bottom line revenue. On top of that, and I'll make a point about the business in general, and investors have to make this decision. Like if I was an investor, I would be asking myself, is this a market that I want to invest in? And if it is, what is going to be my investment vehicle? Is Gatekeeper a type of company that I want to have as part of my portfolio? So and for some of the investors that may not realize, years ago, the market was different from a parent perspective, right? Like you put your child on a school bus, um, you know, there just wasn't the pressure on school districts to deliver video if there's bullying, if there's any incidents that are going on. Well, today that is changed. So there's a lot of pressure, on these school districts to deliver video if there's an issue on the bus, and these parent groups have power, and they have the right to find out if their child was put in harm's way. So and by the way, that is reflective not just inside the bus, but all around the bus, right? And that's one of the reasons that Gatekeeper has really doubled down in the markets that we've doubled down in, which is the public transit side of things and the K to 12 side.
And that's creates an interesting conversation, Doug, into one of my questions because I can tell people that I looked. I found Gatekeeper years ago because I was looking for transportation security. I was interested in the industry sector, and that led me to Gatekeeper because you're it. You don't have a lot of competition in the public space, right? And I did get some questions about, I get the same question every earnings that we talk is when's the next big contract? I know you do competitive bids for large contracts. Typically, the question is, when's the next city contract like SEPTA? And there's been talks about your only competition seems to be in the private sector. So, is there a plan for Gatekeeper kind of to get that next large contract? Is there potential of you acquiring other companies in the future or, somehow reducing margins to when you're bidding on these contracts or kind of what's the plan is the question that I get asked repeatedly.
Yeah, it's interesting. There was a time when we didn't have a SEPTA and we were looked at negatively. And now, we've turned SEPTA into over 40 million in revenue, I suppose. And now that's looked at a little bit negatively by some investors. So but here's the reality is that we are building we invested this year in infrastructure in the business, and part of that infrastructure is a plan to go after different cities and different types of accounts. We're fortunate because of our execution over the years, where we have a lot of customers, and we have a lot of customers at a time when the technology is starting to refresh, right? And you've got Biden, you've got electric vehicles coming. President Biden has talked about replacing all the school buses, in the next 10 years. I don't think he's going to get there, right? But still, there's a lot of electric buses coming. So that's a fresh palette, and we've talked a little bit about that in the past. So I guess the definition, I would ask what the definition of a large contract is. We're working on deals now that they're anywhere from 1 million to 10 million, and when and if those land, I just it's just really difficult to project. But I can tell investors this is that this platform is a business, um, our platform is a service business model. It is designed to drive more revenue per vehicle, and I'm hopeful in the near future here that we surprise the market with some announcements. I'm really, and by the way, hope is not part of my business strategy. All right, so maybe I shouldn't use that word, but um, it's I expect success from our team, and if we're not getting it, I want to know why. And but that's not the case here. We got a great team in place. We're adding more strong individuals. Just added a new manager on our transit team, and he's already having impact. Just because of the connections that he's got and the know-how that he's got. And it's the same thing with the K to 12 side. New markets, you'd ask that question. New markets that we may be moving into. We have to be a little bit careful with how we stretch the company. But I really think that what you're going to see from us is not necessarily new markets that we move into from a product perspective, like completely different market, but new geographic markets. And we're working on partnerships that potentially take us outside of North America. And so you may see some of that growth. And I'm specifically talking about the train market, because that particular market, you can end up in global projects pretty quickly with the types of relationships that we have, largely because of our work at SEPTA. I mean, that's gotten us into the train business, and we're now doing train conferences and APTA type conferences that are more rail specific. This new FRA ruling is really quite interesting, and we got a nice product suite for that. Our AI that we have built into our health check system we think is going to be a strategic advantage for us because that video has to be checked, on all those commuter rails. And how do you do that, like effectively? We use AI as part of that health check solution. So we think we're going to have a strategic advantage there. And we need to develop more AI applications to make us more intelligent out at the edge. So with that, we see opportunity there.
You mentioned your data center, Doug, and
Yeah.
cybersecurity being important. What can you tell investors about that? I get a lot of questions how that's going, and also is that going to be reported separately? Basically, if you can explain that a little bit more, what the plan for that is moving forward.
Well, the plan for that has we got 50,000 of these mobile data collectors out there, or over 50,000 now, and our plan is to really look at every one of the customers. Where is the wireless trends going to be, accelerating, faster than other areas, and then we want to be offering up those hosted services, in those areas. So we want to get as many of these mobile data collectors online as we can, as quickly as we can. So that's the plan. We really needed that data center, just to have some stability. I mentioned cybersecurity. That's obviously an important piece of it. It's running quite well. Our team, which is pretty lean on the engineering side to get that done, we were able to execute on that flawlessly, quite frankly. And like I said earlier, all of our customers that are paying recurring revenue services, they're now all on the data center, and we've got more coming. So I'd like to see us pushing, as quickly as we can to get us to that 10,000 number. Um, and do I have a time frame for that? No, I don't have a time frame for that at the moment. I will say this though, that I'm bringing the majority of our team together to a strategic. It's more of a execution plan, and that's happening at the end of this month. And really, the purpose of that is to dissect every one of our territories and our company and look at what we need to do to get this company to 100 million in revenue. All right, so that's our goal. And there's how long is it going to take? What do we need to do? Where are we strong? Where are we weak? We're going to do everything in our power here, Cameron, to make sure that we grow this business. And at some point in time, I've said this before, I believe it's only a matter of time before the capital markets gives us the value that I believe the company's worth. And right now we're not there.
That goes well into my last question here, Doug, which is pretty much guidance. You don't give guidance, understandably so. Um, right now, you're on track for 35% this year. If you'd want to give any comments that you can, as far as where you think the near term growth is coming from in Gatekeeper and what you could tell people here.
Yeah, well, you know what? I'd like to be able to give guidance, I suppose. It takes the pressure off me for about half a second, because as soon as I can tell you one thing, that what we budgeted for, we're going to be wrong. We're either going to be high on a number or we're going to be low on a number. And this year's budget, I feel pretty darn comfortable that we're going to hit our budget or be slightly higher than the budget. And um, that should show growth over last year. And in some areas we're a little bit lacking, but in some areas we're a little more advanced than we expected. I've seen some numbers out there from people, and projecting, and this Q2 we're starting to show some quarterly performance numbers that are a little bit higher than I expected. So it'll be interesting to see the timing of some of the projects that we're working on, right? And so I'll give you an example of what's really difficult to project. Nobody really knew that the FRA ruling was going to be coming out. right? So our estimates are that that could open up a potential $300 million opportunity, right? How much of that business are we going to win? Hard to say, but I believe that we're on the right track there, and given our good performance in a major city like Philadelphia, I think that I think you're going to start to see um, you're going to start to see some potential wins in that area, and if you look at the average, I do want to leave the and again, a lot of the investors have heard this, but some of them may not have. Our average sale now is per vehicle is typically on the low end of the scale. So our basic system is just under $3,000 a system, and then that goes up to like $8,000 a system. And then on the train side, you can see our services and bundled services and product can be anywhere from $20,000 to $30,000 a train. So it's a wonderful company to be invested in because we are not diluting the share structure. We're growing that bottom line. I think we're at 4 cents earnings per share now, thereabouts, and we've managed our cash quite efficiently. I said earlier, and I don't want this to be lost. We have we have access now to almost 17 million in cash, right? And I mean, what micro caps can claim that? Name one. I don't know any of them, right? So and especially under 100 million, so um, I try to guide investors to look at us on an annual basis, not on a quarter to quarter basis, because we're still relatively young and growing. And so yes, the quarters can be a little lumpy, but that is not a bad thing if you're invested in the company for the long term.
Yeah, I could see that. I mean, I compare it to, a little bit frustrating, but also the potential here because even with investing in microcap stocks, typically, you try to put yourself in enough positions to succeed. You won't always get it right, but if you do that enough where you're putting yourself in positions to succeed, you will get it right. You'll get it right enough that you're going to see some returns. I kind of see similarities between that and, your competitive bid process and giving guidance. You don't know when everything is going to come in, but if you put yourself in enough positions to succeed, eventually that's going to happen, right?
Yeah. I'd like to leave your maybe with one final thought here. I'd like to reiterate something that I said earlier about for investors. Do they want to be invested in this space? That's the question. And if you look at what Gatekeeper is up to, we just announced a new pedestrian protector product that has AI built into it. And when it comes to why not invest in a company that's saving kids' lives, or at least attempting to save kids' lives? There was a child that was killed just recently in the last few weeks that crawled underneath a school bus trying to get his either soccer ball or football. Driver didn't see him, and unfortunately, took off, and the child was killed. And if we would have been able to, launch that product, and that product would have been installed on that bus, there is a high likelihood that that child would have been saved. Because the way the pedestrian protector works is it identifies using AI, it identifies individuals within a certain range of the bus that are in those blind spots, and then sends a signal back to the driver. So it's Gatekeeper is not only a wonderful performing microcap. What we're doing, is really noble. It makes a lot of sense, and it's got emotional appeal, and it's easy to understand from an investor perspective, right? We protect people in transit. We try to save kids' lives. And AI is becoming, more and more important in, in that quest.
I'm not going to get better than that. That's a perfect, you're right. Perfect time to end it right there from Gatekeeper Systems. I mean, protecting people in transit, helping save children's lives, producing cash, right? There's a lot of great things here to look at. Doug, thank you for joining me on this channel for an interview.
All right, Cameron, always good to talk to you. Thank you.